You've just set up your property investment company. Here's something that most investors don't realise. You've actually just started the countdown to a number of reporting deadlines. If you miss these reporting deadlines, you're going to build up fines and could have your company closed down. In this video then, I'm going to walk you through the key Companies House and HMRC's deadlines that apply from day one using a simple real-world example, so you know exactly what needs to be done and when. Get these right early and you avoid stress, fines and awkward conversations later on. Let's use an example then where you set up your property investment company on the 15th of October 2025. A year can pass very quickly in property. Hopefully you've got some deals over the line, but either way, the compliance clock is ticking in the background whether the company has purchased any properties or not. The first deadline is going to be the confirmation statement. This is an annual submission to Companies House where you confirm details of your company, such as director and shareholder information, to ensure that everything is still up to date. You have a 14-day window after your review date to file it. Your review date is 12 months after you set up the company. It costs £34 to file the confirmation statement online and takes about 5 minutes. I've got a step-by-step video linked in the description showing you exactly how to do this. Make sure you're not late. While there isn't an automatic fixed fine for filing the confirmation statement late, it's a legal requirement, and if you don't file it, Companies House can mark your company as non-compliant and initiate a strike-off process, which can ultimately lead to the company being closed down. The status of an overdue confirmation statement is visible on the public register. Lenders, brokers and private investors can all see it, so it's not a great look for you or your company. Okay, the second deadline then is your end of accounting period, which is automatically rounded up to the end of the month, 12 months after incorporation. So if you incorporate on the 15th of October 2025, the first accounting period will end then on the 31st of October 2026. In some cases, the first accounting period can be longer if it's extended, but it can never exceed more than 18 months. It's important to note that there are two stakeholders for UK companies. Okay, first you've got Companies House and secondly you've got HMRC. Both require copies of your accounts in different formats and have different timelines that you need to track. They operate independently and do not share deadlines or enforcement. So once your accounting period ends on the 31st of October 2026, you then have a further 9 months to file your accounts with Companies House. That gives you a filing deadline in this case study of the 31st of July 2027. Importantly, if you miss that deadline, Companies House will automatically apply late filing penalties. If you're up to 1 month late, the penalty is £150. Between 1 to 3 months late, it's £375. And then from 3 to 6 months late, it's then £750. If it's more than 6 months late, it comes to £1,500. And if you file late 2 years in a row, those penalties can double. HMRC works on a different timeline. Your corporation tax is based on the accounting period ending on the 31st of October 2026. The tax itself must be paid by then the 1st of October 2027, and the corporation tax return, known as the CT600, must be filed by the 31st of October 2027. Okay, the reason the filing deadline is later than the payment deadline is that HMRC expects companies to calculate and pay their corporation tax based on draft or final accounts and then formally submit the CT600 afterwards. In reality, most companies simply submit their CT600 and pay the tax at the same time that they submit their accounts, so there's no requirement to therefore get confused with the different dates. If your corporation tax return is late, HMRC will charge £100 immediately. If it's more than 3 months late, it's another £100. If the corporation tax remains unpaid after 6 months, HMRC can add a penalty of 10% of the unpaid tax. After 12 months, they can then add another 10% plus interest. What's really important to note is that HMRC and Companies House file independently of each other, so penalties can apply at the same time and quickly add up. So you're basically going to have fines from Companies House and HMRC building up concurrently. Even being 1 week late can mean Companies House fine, HMRC interest starting to accrue, and a public late filing marker all at the same time. Fixed HMRC penalties apply later if the corporation tax return itself is filed late. If these delays continue, the total cost can easily run into the thousands, so be warned. Okay, before we finish then, it's worth briefly touching on dormant companies because this can reduce the reporting burden if your property company hasn't actually started trading yet. If your company is completely dormant, meaning no property purchases, no rental income, no expenses and no bank transactions, the reporting requirements are simpler. You're still going to need to file a confirmation statement with Companies House every year because that applies to all companies, including those that are dormant. You're also still going to need to file a set of accounts with Companies House, but these will be dormant accounts, and so they're much more straightforward and simpler than full trading accounts. If the company remains dormant for corporation tax purposes, you normally won't be required to submit a CT600 to HMRC, providing that you notify HMRC that the company is dormant so they don't expect one from you. So make sure if it is dormant, inform HMRC. As soon as the company starts trading or incurs costs, it will no longer be dormant and the full reporting requirements will kick back in. This is why it's important to know your status early so you're filing the right things and not doing more work than you need to. If you're unsure whether your property company is actually dormant or not, you should speak with your accountant and take advice. Final tip is when to actually set up a company for property investment. Okay, remember that the reporting timeline starts as soon as your company is incorporated. My suggestion to you would be is to wait till you've actually had an offer accepted on a property you're looking to purchase. Make sure you're transparent with the estate agent and that you intend to purchase it through a limited company. But in reality, the actual process of setting up a company can be done as fast as within 1 day realistically. Setting up the bank account can take a bit longer, may take up to around about a week, but isn't essential to be in place from day one. Okay, let's quickly just summarise then your reporting requirements based on the case study. So assuming then the company is incorporated on the 15th of October 2025. In terms of Company House then, your confirmation statement will be due October 2026. Your accounts will be made up to the 31st of October 2026 and need to be filed by the 31st of July 2027. From a HMRC perspective, your corporation tax will be payable by the 1st of August 27. CT600 corporation tax return must be filed by the 31st of October 2027, but in reality, report it by the 31st of July 2027 when you submit your accounts, to make sure you just do it all at the same time, just to keep things nice and straightforward. Hopefully you found this video useful. If so, please remember to like and subscribe for further content. And if you enjoyed this video, you're going to love this next one, which is going to show you exactly how you can submit your confirmation statement online. Watch the video now.